Hi, this is George Dagnino. I am really intrigued about the relationship between equity markets and the business cycles. What I would like to discuss now is the current trends and what they're telling us. What I found is that there is an amazing relationship between the global business cycles, the US business cycles, and what happens at major turning points in foreign markets. And what I'm going to show you is what's happening right now and what is the evidence. This is the trend of the business cycle, the global business cycle, as measured and released by an international organization, the OECD. And what it shows is that the global economy has been slowing down from in 2014-15, has picked up growth 2016-17, and then beginning in 2018, the global economy has been slowing down, and right now, as you can see here, is really heading down quite rapidly. What we have done is to develop a real-time business cycle indicator for the US economy. And as you can see, it shows that the economy slowed down in 2014-15. I discussed this in other videos and the reasons why. And then it strengthened in 2016-17. And then beginning in 2018, the US economy started slowing down. And right now, like the international business cycle, is still slowing down. Is it going to turn anytime soon as it did in 2016 or in 2013? Well, we cannot tell, but right now the trend is down. Okay, now the question is, how does the US business cycle relate to foreign markets? That's really what can we use this information to quote unquote time our investment? Again, this is the turning point of the US business cycle. As you can see, the Korean market also started underperforming when the US economy started slowing down. Then here the economy picked up again, and sure enough, the Korean market strengthened. Here there's been a rollover in the business cycle with a slower growth and was matched by a slowdown in decline in the US equity market. So there is a relationship between the US business cycle and the South Korean market. Are there other relationships like this? Well, let's find out. The Japanese market seems to be acting like the Korean market, because when the economy slowed down, really the Japanese market did not do anything. When the US economy picked up steam, then you see the Japanese market strengthen. But when the US business cycle rolled over, the Japanese stock market also rolled over. Let's see now if the Chinese market is any different. It doesn't look that way. For instance, when the economy in US slowed down, the Chinese market had a poor performance. The US economy strengthened. The Chinese ETF rallied. Now the US economy weakened. And what is interesting, that the Chinese market rolled over, but now it's interesting, this action of the Chinese market. Does this mean that the US economy will improve? We cannot tell. What we can say is that as long as US is slowing down, the odds are that the Chinese market is not going to be very profitable. The emerging markets have the same pattern: slower growth in US economy, poor performance of the US market, stronger performance of the US economy, stronger performance of the emerging markets. Here the business cycle slowed down, and the emerging market also rolled over. Now the same as for China, the emerging market is showing some strength. Does this mean that the global business cycle and the US business cycle are ready to improve? We cannot tell. This is the German market. Again, same pattern: weaker market when the US economy is weak, A stronger market when the business cycle rises, and when the economy slows down, the German market is rolling over. Again, the German market is showing some strength right now. It might be saying that maybe the U.S. business cycle is in the process of turning over and strengthen. I think the best strategy is always to look at the evidence before trying to forecast this particular turning point here. Always good to wait and see what happens. Well, the evidence now is compelling because every turning point in the business cycle of the U.S. economy has been matched by a turning point in, for instance, in UK stock market. This is turning down, and this has been turning down. Again, the UK market has strengthened, and this is a good sign that some major markets have been strengthening. It could very well be that we are close to a turning point like in 2016 and 2013. Time will tell. I learned not to try to forecast the indicator that is getting me into the foreign market. I wait for this thing to turn around, which is not what is happening right now. So I'm still cautious. So what is the point of this video? Is that the global business cycle and the US business cycle are closely related. And also, the second important point, that investors can and should use the trend of the US business cycle to assess risk and opportunities of foreign equity markets. Right now, some major markets seem to be turning around and improve, but until the US business cycle improves, I think those moves should be seen as really not reliable. As you know, I edit the Peter Dack portfolio, which is published almost every week in one way or the other. And I also publish 3 books: Profiting in Bull or Bear Markets, Easy Ways to Beat the Market with ETFs, and Investing Wisely. It is easier than you think. Thank you very much for listening, and I'll see you very, very soon. So long.